Beginners naturally make a lot of mistakes while investing. Unfortunately, there comes a high cost with making those mistakes. Firstly, you lose your money. Secondly, you've wasted a lot of time. And third, your psychological well-being suffers as well. So overall, that's not a good situation to be in. And if you have made any of those mistakes, I feel for you. I've made all of them myself. But there's a lot of value in studying those mistakes and recognizing that there is a better way. Not only that, but there are solutions that will help you put the probabilities massively in your favor to actually make money. You want to invest with financial success? Then let's study these top 3 mistakes beginners make in investing and what you can do to become a successful investor. Let's start with mistake number 1, and that is a focus on the short term. People really want to get rich quick. Unfortunately, they will get out of the market what they deserve, meaning if they seek the thrill, the excitement out of the market, the speculation, then they will get that out of the market, but all their money will be gone. And if people focus on the short term, they usually do a lot of buying and selling, and that is a recipe for disaster. How can you avoid this mistake? By focusing on the long term. And the money really is made in the waiting. It's really boring, but this is the truth. And you want to get rich slowly but surely. If you buy and hold, the probabilities are just way higher for you to make money. All of this requires patience, of course, and that patience only comes if you have the know-how and if you have a clear system. Let's look at the graph at the right side. This is the Dow Jones stock index over a long period of time. And the question is really for you, how likely is it that you can make money within a time frame of 1 month, 1 week, or even 1 day? And the answer is, it's very unlikely, because whatever happens in that short time period is mostly noise. And think of a company. Whatever the company is doing within 1 week time frame, do you think that matters? No. It's over a much longer time period where the results really show itself. And it's the same in the stock market. So just look at the long-term trend line, the long-term uptrend of the stock market. The probabilities for you to make money are way higher if you increase your time frame from not days, weeks, or months, but go to years. Then it's much more likely for you to make money. And this is exactly why you want to become a long-term investor. Waiting is boring, I know, but once your portfolio goes up, then it's not so boring anymore. Please let me know in the comments what your biggest investing mistake was. And also, if you like this video, please like it, subscribe it, and so that you don't miss any new video coming up, please also ring the bell for notifications. And this is mistake number 2, doing no research whatsoever. Most people do not do any thinking, and ultimately they buy low quality assets. And examples of that are day trading, penny stocks, leverage trading, shorting of stocks, options, futures and CFDs, fix and flip real estate, buying shady cryptocurrencies, and so on and so on. The list is endless. And I know these are mistakes because I made all of them myself. I know all of these instruments and I tried every technique. Trust me, I did this and it doesn't work. And if you do any of this, the probabilities are super low that you make money. And how can you avoid this investing mistake? By simply doing some research, doing some thinking, and accumulate high quality assets. And this does not have to be rocket science. Really use your common sense here. Now let's look at the right side at some of the examples here. Now let's look at the car first. If you would see a car like that, would you buy it? And on the other hand, if you look at the car in the bottom, would you buy that car? Is it more likely that you would buy that car? And the answer is, of course, the top car. It doesn't even have wheels. Of course, you would buy the bottom car where you have at least 4 functioning wheels, right? I mean, it's just common sense, but this is the difference between low and high quality assets. You never want to own the low quality assets in the first place. Now let's go to the second example. Here you see the headquarters of a penny stock company. It looks promising, right? And also they have no products and no sales. Amazing investment? Does not sound like it. Now let's look at the headquarters of Apple. You see the quality difference just in that tiny little thing. And of course in the products as well, in the sales as well, in the earnings as well, and so on and so on. So just by doing a little bit of research, you can avoid a lot of costly mistakes already. Now here the third example. At the top you see a house in the middle of nowhere. It's really, there's no one even living there. So the demand is literally zero for this house. So of course it's not a good investment. On the other hand, at the bottom part here, you have an apartment in a city center of a major business hub. How high is the demand for an apartment in such a prime location? Of course, it's super high. You will always find someone who wants to rent this apartment. Of course, your chances of making money are much, much higher. Now let's look at the fourth example. Here we have a Dogecoin, a cryptocurrency, that was made purely out of a joke. So there's no substance behind it whatsoever. And now we go to Bitcoin, which is a decentralized store of value, which provides a lot of utility to people. Of course, there's a massive value difference between Dogecoin, which is useless, Bitcoin, which provides real value utility. In summary, accumulate high quality assets, and you do that by doing research and do some thinking. And you can get better at research if you gain know-how and if you have a clear system. This is always priority. If you want to avoid not only making these 3 beginner investing mistakes, but even avoid making further mistakes, and not only avoiding the mistakes, but actually being financially successful with investing, then please check out my free 6-part video series called Investing Unlocked. And it will teach you from the ground up how to get started with investments and how to become a successful investor that makes money. For that, please click at the link in the video description, and it will bring you to the first video. Mistake number 3 is that people mostly buy popular, very hot assets that everyone talks about, and those assets are at record high prices. Of course, the probabilities for people that buy those assets are super low that they will actually make some money. Now look at the right graph at the top part. Here you see the price of an asset, let's call it asset X, over time. And at the peak price, there's a lot of euphoria in the market. The asset X is on all magazine covers. Everyone talks about it. And friends and family call me and ask me, should I buy this asset X? And for me, this is the biggest contrarian signal that I can get. And all I want to do is just sell this asset, not buy it. And how can you avoid this mistake? By buying in times of crisis at low prices when no one wants that asset. And that is exactly at the lower part when the price is depressed in the graph on the right side, when everyone says, I don't even want to touch this asset. And people say to you, are you crazy even thinking about buying this? Then this is usually a great time to buy the asset. And that is called anti-cyclical investing. And this is a hallmark of successful investors. In summary, the top 3 mistakes beginner investors make are the following. Mistake number 1, focus on the short term. Successful investors focus on the long term. Mistake number 2, people generally buy low quality assets, and successful investors buy high quality assets after they've done their due diligence and doing some research and thinking. And mistake number 3 is that most people buy very popular assets at record high prices, and successful investors invest anti-cyclical and buy assets which are depressed and out of favor. This is it for this video. I wish you best of success with investing. Thank you, and until next time.